What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at advanced micro devices, ticker symbol AMD, on a variety of time frames in anticipation of the next trading day, Monday, January 29th. AMD finishing the day on Friday, down about 3 points, 1.71%. Now, as far as 1-minute chart intraday trade opportunities here from Friday, not a lot jumping out to me in terms of clean like bounce or rejection setups, but kind of a breakout micro scalpers heyday here. Unfortunately, on this downside break, you never really got a retest and rejection for a more clear entry, but you got a lot of follow through on that breakdown. Similar up here, though. Again, for me, you never got that back test and support level there, that bounce to confirm that volume weighted average price was going to act as support. So a micro scalper's dream, but more of a timid, tame scalper, not so quick. I mean, not like seconds on the dot. Of course, two completely different styles. Not a ton here on AMD from Friday, at least not a ton that was very clean. Let's zoom out here to the 5-minute chart and we can take a look at volume. I want to show you guys something here. So you can see we got this kind of like more timid volatility here off the open, and then we got that mid-morning pump on slightly higher volume, and then this later morning fade as the volume fades off. So if you're bullish on AMD, right, you're always looking for a move in your direction on as much volume as possible. What does that tell us? That tells us that the majority of the market, or I should say a much bigger sample size of the market, is agreeing with your move. Whenever you're looking at a name and it's going against you, okay, ideally you'd want the volume to be as low as possible, because that shows that we're dealing with a much smaller sample size of market participants. Whereas let's say you're positioned long and the stock is tanking off on massive volume, well, the market's telling us that a huge sample size of market participants agree with that move and the violent nature of that move, typically on news or something similar. So let's zoom out now to the 30-minute and get some more moving average context as we head into Monday here. You can see it's been a little bit indecisive in terms of the 50 period here on the 30-minute chart. You can see this was acting as a resistance level, reclaimed it after hours, last week. That was, of course, Tuesday of this last week. Then we got a little bit of a bounce and a fade through after hours. And then here on Friday, acting as somewhat of a resistance level into the after hours. So listen, here's what I'm looking at. Because remember, we're always looking at multiple charts. Maybe you like to look at the 15-minute. I'm usually looking at least from a day-to-day perspective, not necessarily an intraday perspective, right? I'm looking at a 30-minute, 4-hour, and a daily. Those are bread and butter. And I'm typically looking at the most heavily watched technical indicators on all three of those charts, which are going to be the 50 and the 200. So for me, as I'm looking at a 30-minute chart on AMD come Monday, I'm watching that 50 period extremely closely. From a bearish perspective, I'm going to give both sides here, of course, as always, I'd be looking for a fade off the 50 down, testing the 200, and then ideally a break downside through there. Okay, but understand that currently on the 30-minute chart, you're looking at over a 2.5% move. Okay, so that of course could take one volatile day or a couple of days. We've seen AMD move though, for sure. From a bullish perspective, those of you positioned long, however you have done so, shares, options spreads, there's one thing on your mind on a 30-minute chart on AMD come Monday: hold above, retest, claim that 50 period as a support. Let's move on here to the 4-hour chart. Take a look here. Here on the 4-hour, that really anything relevant here is going to be that 50 period. However, you're still looking at a downside move of over 6% to even test that. That would be a very volatile day here on AMD, but we've certainly seen it. So as far as a 4-hour chart is concerned on AMD, really not a lot of 4-hour specific, incredibly psychological levels that I'm paying very close attention to. Okay, let's zoom out here to the daily here on the 2-year daily chart. Of course, we have earnings coming up on Tuesday on AMD, January 30th, after the market closes. Now, a few things to for sure go over here. Take a look at this. The 200-day, way down around 115, not relevant as of right now. Okay. The 50-day, right around just below 140. Ideally, having enough volume and time spent up at near these all-time high levels, right around 185. to start tearing both of those moving averages upside to act as potential backstops. Of course, to the downside, there's that 150 level, but we've, very quickly, very recently ripped hard away from that level. All right, volume as we head into this week's earnings, of course, higher than average. That makes a lot of sense as the stock moves higher. You bulls, that is a positive thing in hindsight to see that, because we're seeing a larger sample size of the market. We're averaging over 100 million shares a day, which is relatively uncommon here on AMD, making an aggressive upside move, right? That's a larger sample size of the market, confirming your bias, agreeing with your sentiment. As far as bears are concerned in the last couple of weeks, that's not necessarily a great thing to see. Okay, now let's discuss a bullish and bearish scenario here, both perspectives. Listen, from a bullish perspective on the daily chart, we're looking at levels. Okay, 180 is a relatively obvious, semi-round number psychological level, but really, the level to watch if you're a bull on AMD, it's not crazy, guys. The all-time high is less than 5% away. We've seen AMD move 5% plus in single-day volatile days, and coming into earnings, I expect volatility to be elevated, or at least throughout the week of earnings. Okay. Now, from a bearish perspective, ideally you wouldn't want to necessarily make another test of all-time highs, being that it's 4.5-5% against you. But 180, ideally you'd see a fade off of 180 if you're a bear, and then you could start to look making your way down to that psychological level potentially of maybe 175-ish, 170, getting down through there on what you would hope to be potentially a fade, some nervousness, some uncertainty heading into that report on Tuesday. Okay, but again, considering the volume here, the volume is higher on a move higher. Okay, that shows a sample size agreeing with the move. However, the last couple of days bouncing around in this 175 to 185 region. Now, for you options traders, understand this is not uncommon heading into earnings. IV is elevated. It's almost 60%. Just as recently as December 8th, it was down around 32%. So understand that if you're buying options very recently, you run potential elevated IV crush risk. If you bought options maybe a month and a half ago, you've likely noticed that if they were calls, you've made a little bit more money than you may have calculated, taking into consideration just the delta movement and theta decay. And if you've owned puts, for example, perhaps you've lost a little less than you may have expected, just calculating out the delta move, because that IV pump, since you bought them down here around 35%, has helped out those purchased options positions. Now, for those of you selling options into this event, whether it's bullish or bearish, understand that if we see an IV drop off, that will blow a little air into your contracts from Vega, whether you're correct directionally or not. That's not to say that you will make money for sure, right? You still ideally have to be correct directionally, but options, the value of them is encouraged. Let's say it's influenced by all the Greeks. That's why it's so crucial to understand the Greeks. If you're going to dip your toe into options, it does give you an advantage to have a deep understanding of all the Greeks and how they operate and what's most favorable for you. Okay, so let's finish out here looking at the options chain, see what the traders are thinking heading into this coming week. Big sample size, that's good. We want as much volume as possible to get as good of data as possible. High sample size data, right? 1.34 million total contracts, 811,000 of those were calls, 531,000 of those were puts, so we're seeing a bullish weighted overall call to put ratio. But what about the short-term speculation, right? That 0 to 20 delta, the cheapy, speculative contracts by nature. Well, within that delta range, we're seeing almost 290,000 calls, 239,000 puts. So we're seeing an overall bullish weighted overall call put ratio on a big sample size, and on a similar large sample size, right, over 200,000 contracts each, we are still seeing a slightly, not quite as much as the overall ratio, but a slightly weighted to the bullish side, short-term speculative bias by looking at the volumes in the delta ranges. Okay, a lot of information to be had here in the chain, often gets overlooked. If you got value out of this video, perhaps leave a like on the video. Helps out tremendously with the YouTube algorithm. And also subscribe to our brand new channel here, Roensch Capital Charts. I appreciate it. I'll see you in the next one.